Morning, everybody. It's the 10th of August. We are Signal Centre Talking Bull. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Good morning, Joe.
How are you doing?
All right, not bad at all.
Good.
How are you?
Yeah, I'm all right. Thanks. Now that I'm allowed out, it's life's a bit better. After
Yeah. How many times have you been locked down?
um,
Like not locked down, like had to sort of self-isolate
just
or whatever.
that was the first one. The last time we had to do it was last year when we came back from France and we got busted in the middle of our holiday.
Oh, of course, yeah.
Yes, that was the last time. It's
Right.
not been too
Okay.
bad. I'm sure people
No.
have had it worse.
Yeah, I think with the NHS app, a lot of people have had it a lot worse, especially if
Yeah.
they've sort of dared to venture out.
I'm also sure a lot of people actually want to be pinged as well because
Yeah, definitely.
it means they don't have to work.
Yeah, it is. No, seems to be. I think it changes in a couple of weeks' time, so it shouldn't be as bad as it is. But yeah,
Just got to
coolio.
be careful now so I don't get caught or busted again before we go on holiday.
Oh, of course, yeah, yeah,
That would
yeah,
be a disaster.
yeah. Of course, yeah.
Oh
No,
well,
not
we'll
good.
see. What will be will be. Anyway, onto the market. So gold and silver suffered very swift drops yesterday, giving bulls in the precious metals more reason to be cautious. This is all off the back of the strong US jobs data and continued economic recovery, and also a mixture of poor liquidity as well, given the time of year that we're in. So it's managed to recoup some of those losses. We'll come onto the chart shortly. Just in terms of COVID-19 and what's going on across the world, 38 US states have transmission levels considered high by the Centers for Disease Control and Prevention as COVID-19 new waves began in low vaccination states. And that's continuing to spread across the country. So there'll be different variants having direct impacts on various parts of the US. So clearly more to be done. In terms of what happened overnight, there were gains throughout Asia, and they've come despite recent cases of COVID. In Australia, restrictions are still very much in place, and also China as well. And there is reports that came out overnight that the PBOC, People's Bank of China, could opt to ease monetary policy in the face of recent economic restrictions to provide an even further boost for stocks. So a few bits and pieces to discuss. Steve, where would you like to begin the conversation today on the chart front?
I'll start with commodities. Really looking at oil. Obviously, we've had a little bit of a turnaround in oil. Now, on a weekly chart, this doesn't look like much. Looks like a little bit of a reversal, but when you turn it into a monthly chart, it's a doji evening star reversal. So for me, this is a great opportunity for us to correct lower in oil before the next move. So only a correction, not a reversal. So let's not get carried away. Let's not think, oh, oil's going much cheaper, but it's plenty of room for a correction. Obviously, we're looking at upward trending support has been broken, but we are retesting that level. We've filled the gap that we had on the daily chart. So really decision time for oil. Is it going really need to get sort of a break below probably this level here around about 64.90 to sort of like be convinced by this, and then we can sort of like extend the move lower. In gold, as Joe said, we had the overnight sell-off on Sunday night, very low liquidity sell-off, lots of stops, and the market capitulated lower down towards the 1676 support area. Actually broke it, just got below it on some platforms as well. But on this chart, it's managed to hold above it. But the reaction higher was pretty muted, really. It reacted higher, and it's held around the 1751 level, which was our basically targeted resistance yesterday, which is where we were. I think I'll look to sell it on the gun to head, and we'll dive into that later. But yeah, pretty pleased with the reaction lower from there. Really looking for 1723 as the next support, a break of there, and we'll really be full on for a retest of the 1676 level. 1751 offers great resistance. another market I really wanted to look at, just based on the weekly, to be honest. That's monthly. Let's get it to weekly. I'm a bit more in tune this morning. Really nervy looking shooting star candle on the Bund. This is a 10-year European government bond. We have sort of like moved a little bit higher this morning, but if we look at the US 10-year, that's a shooting star has formed, and that's it. That's shooting star. Oh, that's the yields. And on the T-bond, sorry, that was the US treasuries there. That's the UK gilt, and that's also topping formations in the fixed income side of things. Just wanted to sort of highlight that as well. Cryptos, I've done a video on Bitcoin and Ethereum, Ripple, Cardano this morning. That's will be available on YouTube. Pretty decent bounce back we've had. We have bringing the Fibonacci lines into it. Resistance, the 50% Fibonacci retracement. It's not normally a big fib level, but you know, it tends to attract on the odd occasion. Really more interested in this 61.8 and slightly above, where I think we'll get, if you really sort of like want to drill down onto the detail of this, really had a double bottom formation formed here. This led to a neckline here, and also if you want the measured move target, I'll give it, yeah, measured move target was here, so it's achieved the measured move target. However, what this has created is not just a double bottom, but a treble or quadruple bottom, which brings in the neckline up here. For me, that's the neckline. Measured move target comes in around about 52,000 for that move, and it looks like we're marching onwards and upwards to that level. So pretty positive on Bitcoin. Support will definitely be coming in around about the 42,500 down to 41,000. That would be the area to set longs. Maybe with a stop below the 37,000, targeting this move higher, which would be a nice 2.5 to 1 risk reward. So yeah, Ethereum has extended higher as well. It's broken above that really strong resistance line at 24th of May week, and it's retested it this week and kicked on. So again, looking to break higher. We've got fib levels we can bring in. 61.8 comes in at 3,363. Ripple, however, not done as well, the same as Cardano. It really hasn't even got close to achieving what the other two big boys have done. And Cardano, we can see a similar sort of formation where we've had these higher lows, which played out really nicely, and we've broken above. Well, actually, we can't say we've broken above it. We have poked our head above it, but we haven't closed above it. So this is the double bottom formation. But again, there's further resistance up higher that we're not even near to. So we're hanging around the 148 level. Really needs to close above that. And then the measured move target for that would also be, let me draw it for you. Measured move target would be an extension way above the 61.8, actually up to 205. That feels a little bit more difficult. I can't lie. Don't know whether it's going to get there or not, but we'll see. We'll see how it plays out. Indices, still the same old with indices. Pretty positive last 4 weeks for FTSE, but again, looks a little bit toppy the way the price action is around here. Hasn't really got the enthusiasm to push much higher, but we have broken above this downward trending resistance line, but just holding. So still potential for it to move higher, but it seems to be dragged, kicking and screaming up. We've got a really nice resistance level, which we're retesting. Yesterday's hanging man candle looks a little bit ominous. So really need to push above this 15,800 all-time high to shake off the nervousness in the markets. We've got the long-term upward trending support line, which we've reacted off, but almost feels a bit trianglified up here. That's a new word I've made up. Dow Jones again, all-time high, 35,250. Nasdaq, all-time high, 15,183. They're all hanging around here. So really looking for 4,440 in S&Ps. Surely it's got to go higher, but it really is struggling at the moment. But I wouldn't stand in the way of it. And again, I keep looking for these topping formations, which we see, but they're very, very short-lived. So I'm, not going to get too involved there. Aussie 200, despite the weakness in commodities, the Aussie 200 is holding up really nicely. China 50's had a bit of a reaction back higher above the 15,700 level. It's kicked on really nicely this morning. 16,000's been taken out, although we're trading just below that now. Hang Seng, similar sort of prices to last week. We got up to the 26,630, just short of there. Looks like a potential hanging man candles, which is slightly bearish, but we'll have to wait and see how that plays out. And the Nikkei, very indecisive looking. So again, maybe the Asian Pacific stocks, Far Eastern stocks, I call them, are struggling a little bit more. Apart from the Aussie 200, that's holding on quite nicely. That's about it.
Cheers, Steve. We learned some new words today.
Yeah, it's good, isn't it?
Yeah.
You learn everything new here. So
yeah, thanks for that. So let's get on with FX then. So starting with dollar index, another push higher yesterday. Following Friday's big move to the upside, we saw that backed up yesterday, and we've got more gains today. Although only very modest so far. Obviously, it's very early in the session. The one concern I do have from an intraday perspective is whether or not this resistance level here at 93.02 is going to continue to do a job. So this was an unfilled gap previously from back here in April, which we filled. Clearly acted as resistance. We saw a big move to the downside, or a corrective move to the downside, and now we are seeing another retest of this level, and also it's the underside of this broken wedge. So whether or not these combined factors will come together and form more resistance, who knows. What I'm really interested in though is, I guess, the long-term picture here and this weekly chart. This double bottom that we've got that's been playing out from January earlier this year, and then in May the neckline of this pattern comes in at 93.43, and if we break above this, then for me we have secured a decent bottom setup in the dollar index, and we can expect higher prices over the medium term, up to as high potentially as 97.66 to 97.72. So some decent levels to target there on the upside, but all that matters in the short term is this 93.43 level. So looking at euro dollar on the flip side of this, on the weekly chart, not looking great at all. So I've been thinking this has been a head and shoulders top for some time. So we've got left shoulder here, head here, right shoulder here, and now we are breaking the neckline on the weekly chart. So good few days to go before we actually confirm that. Obviously it's only Tuesday. We need to be below this level at 117.52 come Friday, and then I think we can pretty much safely say we have a head and shoulders top in place there. What I am looking at on the daily chart though is a slightly lower level. Yesterday we took out this support here at 117.52, which is obviously a level I just mentioned on that weekly chart. But what we have down here is this swing low from the 31st of March, which is down at 117.04. Now, if we take that out, then I'm a little bit more, I guess, convinced that this top pattern has actually taken shape. I've got it drawn here, as you can see. Take out that low, and I think it is open season on euro US dollar for the bears, and we will see lower prices down to 110.56 according to my projections. Obviously going to take some time to play out, but looks pretty scary, I think. What do you think, Steve, on that?
I think it looks scary as well. Yeah.
I mean, it is a really nice looking head and shoulders top, and they're not always the best ones, unfortunately. If they're too picture perfect, they can be you can get sucked in and they don't actually play out. But the fact that this has taken so long to take shape, makes me sort of more interested in the pattern, I suppose. Let's take a look at some of the other US dollar markets then. So Aussie, this completed a head and shoulders top weeks ago. Continues to be very weak against the US dollar. What we've seen, I think, in recent sessions is a bit of a flag formation take shape here, as you can see within this sort of yellow channel. And yesterday we saw a pretty convincing break below the lower end of that flag, and that should indicate a continuation of price to the downside. Now, in terms of measuring the move, it depends where you sort of say the flagpole begins. Arguably, it could be as high as the right shoulder, and then we've been projecting that price lower, which could be, pretty horrendous, I think. Let's have a quick look. From the break point lower, where does that come in? It actually comes in down here at 67.51, which is also the 161.8% extension of the head and shoulders top pattern, both coming in at roughly the same level. So that's a bit spooky. And that was just downside as low as that over the medium term, which is pretty scary.
Not if you're holding dollars, it's not.
Not if you're holding dollars in your short body. No, it's fantastic.
I mean, the Australian dollar does feel a little bit scary.
Yeah,
I'm not going to lie. It does feel weak.
On the flip side of that, New Zealand dollar. Maybe my chart's a bit of a mess on this in a minute, but that's not really going anywhere. It's not breaking down any sort of patterns. Yes, we've got some supports down here, but every time we've seen sort of breaks lower, they've been pretty short-lived. And this is very choppy. And when you compare that to the Aussie, typically they're quite highly correlated, but certainly not at the minute.
No.
Let's have a look at elsewhere then. So Euro sterling breaking to new lows today. It did have a go yesterday. Its intraday low was at 84.61. We're not quite at that level yet, but we are poised potentially for a fresh close at new lows. And those lows haven't been seen since back here, which was in February 2020. So opening up a lot of fresh air for this to move into to the downside. Next sort of major level of support is down at around about 82.75. So not looking good if you are longer euros versus the pound at the moment, unfortunately. This is quite interesting. Sterling Swiss, nice little break from a corrective wedge that seems to be forming today. In the sort of shorter term picture, we had a 38.2% Fibonacci retracement down to this 125.42, which did a very good job of support. Contained this sort of corrective wedge, and now we're seeing a break up. So that could easily move back to those highs that we posted earlier this year in April. So looking quite bullish on that front. Cable. So I mean, this is obviously going to war with what's going on with the US dollar at the moment, and that looks for me probably more bullish than sterling does at the moment. So I think we're going to see some chop in this and some difficult opportunities, trading opportunities in the very short term. So overall, I think we're just going to see more kind of range bound activity. Obviously, the key levels to watch on the downside are 136.70 and 135.72. If these levels break, then we are potentially opening up some downside, and we'll continue to see strength in the US dollar. The other one to wrap up with is dollar yen. That's had a bit of a consolidation move, trading in a bit of a corrective channel, but broke out on Friday when we had the non-farm payroll number, and seems to be doing a pretty good job technically and is moving higher, although volumes aren't overly supportive. But short term, the trend still looks pretty robust on that. That's it for me on the FX side of things.
Nice one.
Okay, gun to the head trades from yesterday. Stevie, you're on a hot streak at the minute.
Woo!
2.55R yesterday on gold, 19.2 ticks. That is 4 sessions of smashing it. 8.75R.
Yeah, I like it. Taking nearly $60 out of gold.
Yeah, love that.
Oh no, actually no, and obviously $7 before that. Yeah,
65.7 dollars.
It's easy, isn't it?
Yeah, it's well easy, mate. Come on, give us another one.
It's not easy. Gold. Let's go for gold again.
Hey.
Can't go wrong. It's like so easy. Looks a bit looks a bit different this morning. Actually, doesn't look as easy as I thought it might do. So looking at a short-term chart, we're back above the 30-minute Ichimoku cloud. Still feels bearish to me, mate. I'm not going to lie. I think I've got to stick with the bear tact in this. Let's have the stop at 17.55, just above there. So we've got a 20 tick stop, $20 stop. And so we need at least a $40 target. Takes it down to 16.95. I'm going to just go for a little 2-to-1. Why am I being so? Because I'm doing well. I'm not
Protecting your
being as
P&L,
aggressive.
aren't you?
Yeah, I know that's bad. Right, that's a good lesson to learn. Let me just see what's going on here. Potential trend line. So if it holds here, so really, if we do manage to hold, what was this high? 17.38. We don't get above there, then that does open up the potential downside. I still think we're let's do it, because this little candle here is a bit of a shooting star candle followed by, well, it's a shooting star formation really. So if we really look at a really aggressive trade, we're going to get short here 17.35. We're going to target a move to 17.06, which is a really not an odd number. Let me do this. 600, 3,000. There we go. 5-to-1 risk reward. This is the stop is at 17.41, $6 stop, and I'm targeting a move back down to the 1700 level effectively, but 17.05.18 for the purposes of this gun to head trade idea, which is a bit of fun.
Don't forget that, guys. It's just a bit of fun.
Yeah, there we go. That's me done.
I'll
retire it. If this comes in, I'm retiring.
Okay. Right, I'm going to go Aussie dollar. So I talked about how that looks on the daily. Not a fan at all. Think it's got potential for a lot lower prices. So zooming into the hourly charts to try and finesse an entry, I suppose. It's currently trading at 73.35. So I'm going to sell it there with a stop loss at 73.68. And I'm going to target a move down to 72.22. Just been annotating this while I was on waiting for Steve to do his trade idea, but trading in a bearish channel in the short term, bit of a correction, failed, breaking lower. Actually have to go quite far to the left to find a previous level of support to target. Actually, prices haven't been seen since late 2020, so hopefully that will play out. That's looking for 3.3R today.
Lovely.
We will see. Okay, what we got today? Looking ahead, we have the ZEW Economic Survey out of Germany at 10 a.m. Can be a bit of a market moving number. It's expected to tumble from 61.2 to 45.6. So obviously not expecting much from that. Anything better than that, then we may see a little bit of a reaction to the upside. In terms of what's going on the corporate side of things, only numbers of note are coming from Coinbase in the US, which is obviously a relatively new listing. And since its last numbers, I think we've seen about a 50% bounce in the value of Bitcoin in that time. So that'll be well watched to see how they're performing as a company. And yeah, I think that's pretty much it. I think we may have a Fed speaker as well later on who will be talking about inflation risks. So potentially some commentary out of that as well.
Inflation risk? Surely not.
Maybe.
Weird.
Okay, Steve, that's it from me. Anything to add before we wrap up for the day?
No, that's about it. I'm being sarcastic enough today.
Fantastic.
So,
thanks, Steve.
Thanks for the opportunity.
Yeah, loved it. We'll be back tomorrow morning.
Cheers.